I have a gun. I've trained my whole life. I'm ready for this. I'm not fucking doing that. And you run in, I'm running in, and you get gunned down, right? And then you die.
Quick disclaimer, these videos are meant for educational purposes only. Anything said or shown in any of these videos are personal opinion and my perspective. Trading carries a high level of risk, so anything done is your responsibility.
Hello, how's it going? And welcome back to MENTFX. It's been an immense, just absolutely beautiful last few weeks. You know, I'm going to keep this video a little bit shorter. I just kind of woke up, so my voice is a little bit gone. But I want to get on here and talk about, one, how the things we've discussed, specifically in regards to what the entire space teaches you, and in regards to what I'm teaching you here, has played out absolutely beautifully. I don't think you get better delivery than this. I believe I've started sharing my Euro US dollar longs with you guys ever since the inception of this move right here, discussing how we were going to make a run on this and then likely actually continue the run. However, instead of that occurring, prices ended up breaking back down, creating a reaccumulation model, something I've taught in some recent videos, but most importantly within the private mentorship, where, you know, close to all my time goes, about 60-80 hours a week goes into that. And I mean, we've seen some insane stuff. I'm just going to bring this up for just a second here. You know, here we have a member who was a member a few months ago, took a little bit of a break to focus on himself because he had the actual education he needed to go ahead and take himself to that next level. Because remember, guys, a mentorship, a course, something that you pay for along those lines should not be something that you need to keep paying for unless you want to. Something that's really important to remember is that the members that we have, the people that stay on monthly, every single month, are not people that just need the education or need to stay there because they need to learn the next thing. It's because of the kind of community that is created and the kind of people you get to surround yourself with, the loneliness that you get to take kind of away from the trading space, and kind of the area that you can now shoot the shit with a bunch of other people, right? So what I need a lot of people to realize, especially if this is like your first time watching me, is I don't care what your background is, but if you're part of a mentorship where you just need to keep going forever for the next few years until you can find it, you know, what are you actually teaching yourself? If you're part of a mentorship where you're sitting there taking, you know, where you're sitting there taking signals or waiting for the next signal and being dependent on someone else, what the fuck are you doing? You're not doing the things that are going to build, you know, you're not doing the things that are going to build guaranteed independence. And if you really ask yourself, even from my very first few videos, why is it that you're in this market to start with, right? Like I always ask this to traders. It's like, why are you here? And everyone has the same answer. I want to be financially independent. I want to work for myself. I want to blah, 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 blah. And then they'll turn around and go, while I work on doing those things, will you tell me what to do? Will you be my boss? Can I be dependent on you? Will you give me the trading signals? Is that okay? And it's so weird. It's so interesting how the space works, but that's how the space works. So it is what it is, right? So yeah, like people don't realize that, you know, they claim from a why perspective that they want this financial independence, this freedom, this ability to work for themselves, and then they'll turn around and rely on someone, on signals, on a learn and you earn model till the end of time, and then they quit eventually. It's like, what are you really doing here? Right, so just to catapult this, the reason I want to get this video out here is because not only have we seen this beautiful bias deliver, which is something we're going to break down today in regards to the tools that I use personally, in regards to my structure indicator, which is based on my version of SNDs and how SNDs move, thereby putting forward a beautiful system of SSC where we actually understand how prices move and then are likely to keep moving rather than get ourselves swamped up in the opposite side approach where we're basically looking for this move here every single day, trying to clear lows, trying to clear imbalances, whatever it might be. We start understanding how prices move, and then we capitalize on these trend-based environments, and as a result, when they come, because they do come, and I talk about this time and time again, I think since webinar 100 plus, so 109 webinars, so about 9 weeks now, 369, what's that, 3 months, we've been extremely bullish on this thing. We switched to a sidelines environment for a little bit with the team right around this point here. Around these points here, I believe on a 4-hour. Yeah, so around here as these started to break down, so 1, 2, around these 2 breakdowns here, we stepped away from Euro US dollar completely. I didn't watch it during this entire time here. There was nothing for me to touch. And what's interesting here is me not touching it actually made me a lot more money, because something that a lot of people forget is that not being in a position is a position within itself, right? And what's even more interesting is that if you did get positioned on this, on any time frame that is actually scalable, so this was going to go hand in hand with my last video where we talk about scalability. And if you're trading a system that's actually scalable, if you were even able to find sells on this thing on a scalable time frame, like a 15-minute plus, 30-minute plus, 1 hour plus, and you really just kind of draw it in, right? You just draw in, let's just say an average, something like this, okay? Right, if you just draw it in, you can see on average, if we just draw it through, that even though it's a bearish market, it's what I like to call a sideways choppy bearish market, right? Corrective, whatever you want to call it. And as a result, no matter where you kind of got involved, if it was a system that doesn't rely on 2 pip stop losses, 1 pip stop losses, which can work and do work but are not scalable, then what's going to happen is you're likely going to be taken out of price even though you're correct about it. So this is where this fun little issue that everyone loves to complain about of, hey, I get in and then price takes me out but goes in my direction. You know, hey, I'm right about direction but I never get in. You know, there's two signs for that occurring. One is you don't understand the condition of the market that is completely shit. So even if you do enter and you are correct, you're still going to get stopped out or broken even or just stopped completely before you get a run due to the nature of that underlying market, which is already that it's bullish, but now it's having its bearish correction, and therefore it's a choppy and shitty bearish correction. And the other side of that, so that's one way you can have the issue. The other way that you can have the issue is when you have an actual market that's established full on bullish and you're sat there waiting for the fib retracement, the discount retracement, the imbalance retracement, the equal low retracement, right? So there's 2 sides to the coin. And if you're making either one of those mistakes, which is actually most people, then of course you're going to be losing. So on one side, you might be right, but you're trading a market that you should never be touching. And on the other side, you might be right, but you're forcing every aspect of the market that you should not be forcing. What I mean by that is, you know, when you get this break, I'm already looking for longs. I'm entering longs on this candle right here. Now, the reason for that is not going to be explained here. Why not? It's called the ICI. This is what I call the impulse correction impulse methodology within the MENTFX private mentorship. Very simply, it's looking for the underlying money and where it's heading and where it could be heading, and then looking for this simple setup of ICI where you have an impulse, you have a correction, or you have some kind of, you know, move down, and then ICI inside of here, or, you know, and it corrects across the top, and then you take this breakout. Very simply, it's a basing period before a breakout. That's really it. It's a very, very simple method. And as I love to say, you know, the simple methods are the ones that make the most money. It's just that people will not take the time and undergo the complexity that allows them to execute something simple. So there's 2 issues that you mainly see in the markets for most people, and that is, one, when they start getting something like this, they want to enter it, and even though they're correct about direction, they keep getting stopped out because it's becoming a more wicky market. And the other side is, let's say they now understand the market is bullish, because I think that most people understood this market was bullish. However, the problem is they're not showing up to look for longs or to stock the longs. Instead, they're focusing on the following. They're saying, okay, I'm a longing market, but I will only long it if it gets here. I will only long it if it gets here. I will only long it if it gets here. If it gets here, if it gets here, if it gets here, if it gets here, if it gets here. Now, if it gets here, I'll long it. But now it's so far away, so if it gets here, I'll long it. If it gets here, I'll long it. If it gets here, I'll long it. And what happens is you start to just almost trail price, but you never can actually get entries because you're focused on the wrong thing. And something that you can do that's even worse is, once you've established that it's the bullish market, what most people will do is they will look left, not for the purpose of understanding where they are structurally and where we're likely now heading, as I spoke about in the last few videos over and over and over again. Instead, they will look left to stock where price may stop. So at this point here, as I spoke about last week and the week before that on every single public video I've released, they're looking here as, hey, I got a resistance, I'm going to sell it. Hey, I got a resistance, I'm going to sell it here, or look to sell it. I got a resistance here, I'm going to sell it to get back down to my longs, right? To get back down to my support here before I look for the continuation longs. Here, 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 here. So that might be the school of thought you're in. The other school of thought, you know, let's say you're not a support resistance kind of jabroni, is, hey, there's an imbalance here that needs to be filled. So clearly we're going for this S&D. We're going for this S&D. We're going for this unmitigated wick. We're going for this unmitigated price action. We're going for this unmitigated price action. We're going for this imbalance. We're going for this imbalance, right? So, and then your idea is price can stop at any of these points. And then from those points, we might be able to get a retracement into a deeper zone so I can get my discount and then I can go long, right? And that's where those exact issues come from. That's exactly how our team continues to completely decimate the trending side of things, because the people that are trying to do this are getting right once, kind of, but in a choppy market, and sometimes they get the real falling knife. They finally predicted the falling knife, right? Boom, we got it. We've predicted where the move's gonna go, right? But they just spent all these moments here likely taking losses, while all we've been doing all week long over and over and over again is stalking those longs, except for this area. So after this break and this break, ever since this candle, we didn't touch this thing until this candle break up. Again, showing you the importance of understanding when a market is worth trading for you and when it isn't. Many people will not take the time to do that. Many people want to show up every single day, look at any given market at any given point, anywhere, anytime, and say, okay, what trade can I take right now? That is one of the easiest ways to lose. This is known as the school of thought of I want to see action, but I don't want to win, right? So imagine you're an army general, just for a second. You know, you have your gun, and your commander comes in, or yeah, sure, your commander comes in. I'm the commander, okay? And I say, okay, listen, I know you got your gun. I know you've been practicing your whole life, 10 years, 20 years to be on the front lines. I know you're ready. I know you got the skills. I know you can go, pew, 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 pew. I know you got this shit. You're going to kill it, right? You're going to be amazing out there. You're going to win us the war. Let's say that's the case. But what we found out through our intel is that very simply, if we take off the gun and we put on a ghillie suit and we just go with camouflage right into the enemy base, we can trespass everything, get to the necessary area, and win the entire war with just that. And then you look at the commander, you look at me and you go, are you kidding me? I have a gun. I've trained my whole life. I'm ready for this. I'm not fucking doing that. And you run and I'm running in. Oh, and you get gunned down, right? And then you die. So it's very similar in the trading space, where many traders are the gunman, the crazy gunman, and all they want to do is they want to see action. They think that everything they've done up to this point is requiring of that action. So they're going to run in with their guns. Where's my trade? What's price hitting today? Okay, it's here. Is there anything? Oh, I can't see it. Maybe I go further left. Oh God, where is it? I'll go further left. Come on. Is it hitting anything? I just need to find something. Okay. Oh my, it's hitting this unmitigated point. Let me go back. Yep. Yeah. Okay, it's definitely bigger than that. There we go. Okay, maybe on a 1 minute. Oh my God. Yes. Oh, Instagram, here I come. Okay. Already at break even. Right? This is the student, the person, the trader that doesn't want to listen to the commander. This is the person that doesn't want to win. They want to see action. You do not want to be in the boat of someone that wants to see action. It's useless, okay? You're not here to see action. You're here to win. Well, at least I am, okay? I don't show up any day to see any action. I don't even show up to mostly trade most of the days. If the trade's set up, then fantastic. There are opportunities available every single day, and as a result, I'm usually in a trade, but I'm not showing up every day onto Euro US dollar, GBP USD, gold, Adobe, DOCN. I don't show up on these every day going, I'm going to get the trade right now. Here I go. Where is it? What's it hitting? What can I do? Boom, boom, boom. I'm getting in. I'm getting risk on. It's a really, really intrusive thought. It's a thought that's going to break you down and basically have you losing forever until you realize that you're not showing up for the action, you're showing up to win, okay? So until you make that one break in your mind, you're going to be losing, okay? So now to further this, right, the reason I bring that up is because of this area here where there was nothing to do. There's nothing to touch. For a while there was nothing to touch. People will say, but what could you have done? Could you have taken the short? Oh, yeah, you could have done anything you wanted there. The underlying, though, is that the market's been showing you for a while now that it's long. So let's get into the actual technicals. Let's talk about why this market's been showing you long. So I've been sharing this in the private webinars, and I share this every single week, and we talk about the upcoming week. Just like this week, when price was on Monday, right here, we discussed the fact that price was going to reach, take out this high, and then likely continue significantly higher. And that's exactly what we're following now, and exactly why we're doing very well, and exactly why, firsthand, and why I'm making this video, you're seeing this week alone, just some people getting funded with mentfunding now. You know, this guy got funded a little while back, but he weared off on sharing it. This guy just got funded today. So it's been a beautiful week for execution for those that understand trends, and it's been nothing but beauty, right? So let's talk about the context that led us to this underlying bullishness, why that bullishness was there, and then why areas like these we ignore. And we don't sit there like the little gunmen ready to run into the enemy front lines because we think that we're so well trained. Because you're not. Doesn't matter how well you can shoot a gun, right? If there are 1,000 other enemies out there with guns as well, and they even have a fraction of your skill, even if they have a 1/30th of your skill, you're gonna lose. It doesn't matter how well you do, right? Similarly, if you show up to the market without a concrete plan, or without a concrete understanding about where and why you're going to enter a trade, then of course the thousands of variables that are happening at any given moment are likely going to take you over rather than allow you to take an edge out of them, right? So in moments like these where I'm bullish, I'm not in a trade right now, specifically on EU, I'm still stalking for a long. Sadly, there was a news drop this morning. There actually might be a trade here that I might get into maybe after this video. We'll take a look, but this is not that clear of a setup just yet. And this is also underlying under the ICI, which is taught in mentorship. And I'm working on a remastered course currently that's going to go a lot more in depth on this, right? But what was the context that allowed us to do this, right? And similarly, before we continue very quickly, those 1,000 variables are going to lead to losses for you every single time unless you take the time to recognize when and where and in what context you're actually going to be trading. So let's talk about why we've been bullish on this, why we continue being bullish on this, because nothing has changed, and why I continue talking to my team about being bullish on this, and why I've been doing very, very well for myself on Euro US dollar, GU, gold. I mean, all of these have just been absolutely beautiful, and we've shared a lot of these in the mentorship. I mean, like, look at this. This is just beauty. This is what trending markets are. Close to everybody in the trading space is looking for shorts for some reason. You're probably one of them. The person watching this, maybe you're not. Maybe you're, keyed into the MENTFX ways, but you're likely one of the people looking for those shorts, and probably were looking for shorts all along. But let's talk about it. So a while back here, this was on a 6-month chart. We were actually, before we do that, it's actually on a 12-month chart. Before we do that, let's talk about something interesting. On my channel, this is all shared publicly. I'm going to make this very quick. During the time from around this break here, from around this candle break here, we remained bearish on this, on Euro US dollar, all the way up until this exact area here. I actually had a trade personally during 2022. It was one of my best trades from a very low time frame that I entered around here, and that I took all the way down into like here or something. Because again, I don't capture the full move because that's not how trading works. I usually capture the move in between, which is something that a lot of you should be focused on, right? There's no such thing as capturing the higher bottom unless you're showing up for the action every day, in which case you might catch the higher bottom. But the problem with that is you're likely not making money, right? Okay, so to preface this, right, the reason that, one, I run a course, and two, that I try to tell you to watch my previous videos publicly is because you're going to see firsthand how I was bearish and why I was bearish on this move from here all the way to here, and how during this time we did beautiful things with the team, and then how after that, all publicly shared and mostly privately, but all beforehand, during these breaks here, we began to be bullish. We knew this market was going to establish itself as bullish, but we didn't know if it was going to undergo reaccumulation or accumulation to do so. So we actually didn't touch it for a while. So I actually didn't touch this market until around, I believe, this break here. After this break here, and then I still didn't touch it. Well, I started following some longs, and then it started breaking down, so it became bearish, and I didn't touch it until price came into here. So really the only time I've started trading EU with a very keen eye on it and started to really get position on longs on it was around February of 2023. And this was shared with my team, this exact longs. These longs came in beautifully. After we started making a run on this next structural high right here, I discussed with the team that prices would likely continue higher and just continue going crazy. Instead, we didn't get that. Price began to break down, and like I said a second ago, we started not watching the market again around these points here until they reached into our last points of SND. And again, we're going to break all this down in 1 second for you guys from a technical perspective. As prices reached that and underwent an accumulation model on a lower time frame, not Wyckoff, but the MENTFX accumulation, just using the MENTFX structure indicator, which we'll talk about as well. Don't worry, everything will be talked about today before I before I stop this video. Okay, do not worry. But hopefully you're still here. At the same time, it was undergoing a reaccumulation model on the daily. Again, not Wyckoff, but specifically MENTFX. So what I've done in the past few videos, also publicly, is I've shared what I call the reaccumulation model, which is when protected lows are continuing to increase, and you can get multiple of these, right? So that's shown by this indicator right here. And by the way, for any of you wondering what this indicator is, it's not paid, it's completely free. Go to indicators, type in MENTFX structure. That's it. By me, I made it available to everyone. Not just my private team, it's available to everyone, including you publicly for free. Please go learn how to utilize it, whether it be through my private or publicly or through your own, your own workings. I want you to take that knowledge. I want you to develop something beautiful with it for yourself. I want you to develop a trade plan, and then I want you to go and get funded with mentfunding. So if you don't want to join my private, if you don't want to be part of a community like that, if you don't see the value present in any of this, that's fine. That's no problem at all. But take the knowledge you're given and pay respect to some of the knowledge, to homage of it, to the value you might be receiving, and go ahead and get funded with mentfunding, because one, the firm's growing. Two, we're about to put down some amazing scaling plans for the team. But you know what? I don't want to advertise shit. Fuck that. Let's get into the thing. So with the MENTFX structure, which is available to you, what I defined as a reaccumulation model is very simply when protected lows are growing, just like this. They're making stairs higher, and then you get a breakdown. Now, these moments are so beautiful, so important, and we're going to talk about in the private why this is so important, but we're going to talk about it a little bit today. But the reason it's so important is because it's showing you that money's coming in, and it's showing you a phenomenal area to get involved, because it's basically going to be the low of the market, right? So when you get these lows being built, and then you get this breakdown, right? This is that breakdown. It can happen once or twice. It can sometimes even happen 3 times, as I teach in the private mentorship, but the underlying is still increasing. You are getting what is called the reaccumulation model. And at those points, the most important thing, the best thing that you can do is look for reasons that you can go long and look for areas that longs would make sense from. So that's where in the last few videos, right, I shared the understanding that as this move began to break down, that, hey, on the 3-day chart at the moment, from an SSC perspective, price found itself within this range from this low to this high, which puts us at this unmitigated portion, right? The last unmitigated point now shown to you by the unmitigated area here. And then we took that area, refined it further to the wick, because wicks are their own unmitigated portions. And we took that one step further and refined it to its final wick, which was a phenomenal refinement because it kept us out of a little bit of the chop that happened down here until price had tapped in and started its true run up and trend to run the next high. And that was absolutely beautiful, right? So to just break it down, that's where that came from, right? But what made me want to switch to a potentially bullish market here? So as a lot of you might remember, like I said a second ago, we were very bearish on this market for a while during this entire move down here, until it got to this area. What is this little area here? Well, there's a few things happening here. We have things to do with SSCs across time frames, but we also have what we call models occurring. And this is also taught so much in the private because it's hard to get all this across in just videos, but we're going to try it here. So there are 2 types of models that can exist. There's accumulation models and reaccumulation models. And then there's the opposites of those, right? Distribution, redistribution. And again, when I'm saying these have nothing to do with Wyckoff, nothing to do with most of the stuff that you've learned anywhere. These are only to do with the models preset by the MENTFX structure indicator, utilizing basically the MENTFX methodology to understand what model you're in, okay? So very simply, if you remember that a reaccumulation is something like this, where you have increasing protected lows with the breakdown into the continuation now, right? Which is why we're bullish. And now again, it happened here, increasing protected lows into the breakdown into what we supposed to be an accumulation. That's exactly what we're getting now, right? So beautifully enough, those are reaccumulations. Now, similarly, you might notice here, we underwent redistributions, right? Prices lower, 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 breaks up, starts going lower, breaks up, starts going lower, breaks up, starts going lower, 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 breaks up, starts going lower, 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 breaks up, starts going lower, lower, lower. These are redistribution models occurring over and over and over again. And again, notice how it's very simple if you actually understand them to decipher the underlying direction of the market, and as a result, understand where the underlying money, smart money, is actually present in this market, right? Which is why it's been so easy for us to follow this thing. That does not mean that we don't have areas when we take a step back completely, though, and don't have anything to touch. Like, for instance, I think I made a video on UJ last week, and I spoke about the longs on this thing and how I was extremely long, and I'm still extremely long. However, what's interesting is that same week on the hourly right here, we had, just like I showed you just now on the daily on Euro US dollar, a breakdown, a break up, where I was bullish again, and then another breakdown, and then another breakdown. Again, on this candle, as it broke this down, I haven't touched UJ or looked at it. And since then, again, right, it's lost a lot of its value, or it's just made a big down move. Now, again, yeah, I could have been on the short side, but I'm not interested in that. I'm interested in the underlying money and for it to come back in. If it wants to come back in, I'm going to be on this thing. At the moment, though, there hasn't been a thing for me to touch here. And again, the people that are sitting there fiending for a trade, for the action, are the ones that are going to be losing money, even if they're correct, right? So if you're part of that discipline of, hey, I'm always correct, but I'm losing money, forget it, because you're part of the exact same people that are doing the exact same mistake, because that excuse does not hold merit now, right? It's just useless. Notice how I can walk away from a market with no issue. I can follow a market all the way out, be super happy with it, keep following it, took my -1 here. The second this break happens, notice how that -1 doesn't magnify to a -2, a -3, a -4, a -5, a -6, a -20, a martingale, an average down, a fucking keep going. It was a -1. The market began to lose its context, broke its context down by breaking the protected low. I walked away. There was nothing else for me to do. It's the people that can't do that will never be able to walk away from market, and now they're going to be sitting there going, oh, I knew it was bearish, and it's just fucking went bearish, and I was trying to get bullish, and I don't know what's going on, I have issues. It's like, you're doing all the things that you know as a trader you shouldn't do, right? If you could sit yourself down, if you paid yourself 100K to teach yourself something, and you could almost come out, almost like a DMT trip, come out and look at yourself, you'd be like, can you quit doing that? What is wrong with you? You're losing time. You're wasting time. You're wasting your energy. You're wasting your resources. You're wasting your soul. It makes no sense. Why are you doing this to yourself? And you'd look at yourself and go, the fuck is wrong with me? You'd be like, I just paid 100K to learn that. Okay. I'm done. I'm done doing this bullshit, right? Because it's the people that are continuing to force shit as context break down, or as their trades are no longer present, that lose money. Me saying we're bullish on UJ, which I am still, despite the big down move, just like I'm bullish on EU, GU, and gold, all of which are delivering beautifully, just like I'm bullish on Adobe, which is still delivering. I'm looking for my partial still. On DOCN, which, oh my god, it's just opened up even stronger than it's already been. So I'm just going to keep on holding that thing. Right? It's not about the ability to understand direction's a huge part. 80% of trading is going to be your understanding of underlying money and direction, because that's going to determine everything else you do. That's going to determine how you're going to be risking, when you're going to be risking, when you're going to be taking trades, if you're even going to be looking for trades. So it's really important to understand market context. However, after that, it's like, once I have a direction established, I don't care whether that direction begins to play out or not. It doesn't matter to me, right? Whether this EU continued that long won't matter to me. Whether this zone here or here began to hold does not matter to me. This zone could fail. This zone could fail. This zone here could fail. And it would be no skin off my back, because notice how I'm not in a trade despite the fact that I have zones drawn on. The only time I got into a trade after all these zones were drawn onto the chart was here, after the zones had proven themselves, had proven the models, and have now started making the move of the large money in the direction, at which point I could get positioned. Now, I made a personal mistake in regards to my own rule following. I closed this trade way too early. I talk with my team all the time about the fact that I'm a human too. I make mistakes, but my mistakes are limited basically to profit potential rather than losses. If you can make mistakes that are profit oriented, you're going to be okay. If you make mistakes that are context, losses, martingale oriented, where when you're taking a loss, you're taking more. When you're taking a loss, you're taking more trades. When you're taking a loss, you're moving your stop loss, or you don't want to take that loss, or you're doubling up. Those mistakes are going to cost you your entire accounts. If your mistakes are along the lines of taking partials in some cases too early, but that model has been proven to make you money, you're going to be fine, right? I know that with this partial, if I took it every single time, if I closed my trades every single time like this, at 1-5, 1-4, my system would be overall profitable, which is fine. However, I gave up in this case an over 30 RR runner that in my case would be 50% of the position, so about 15%, because I risk about 1% per RR, or just a little bit under. I teach my own risk in my mentorship, but just assume 1% risk per RR. So at 15 RR or 50%, that would have been another 15% gain on my account. So my mistakes cost me increases in my account, but they don't cost me huge drawdowns that other traders are currently experiencing through their inability to trade. And that's a very important distinction to make. Mistakes made in the realm of profit taking versus mistakes made in the realm of actual losses are two very substantial differences. And the reason for that, and you know, you can read about this everywhere, is that it's much easier to make more wins than it is to make back losses. For instance, if I take -1, -1, -1, +3, -1, -1, +2, +5, -1, -1, -1, +2, right? It's no issue because my risk is clean, right? I'm taking my losses normally. That's a -3. Take my +3. We're back at 0. We're chilling. -2. We take a +2. We're back at 0. We're good. +5. We're up 5 RR. Minus. We're at +2 RR. +2. We're at +4 RR, right? We've made money. That's a phenomenal thing. But the problem with most people is that they allow the mistakes that they make to occur with these guys here, which means this -1 can become a -3 instantly. This -1, because it's now doubled and moved with the stop loss, can become a -6, -10 instantly. And already at that point, right, you've locked yourself in for a potential -10. And again, a -10% in this case on your account does not require you to make 10% to get that back. It requires you to make, I believe, like 12.8% because of how percentages work, right? If you lose 50% of your account, if you have 100K, if you go to 50K, to get back to 100K, you don't have to make 50%, you have to make 100%, right? Because you have to make 100% on 50K to get to 100K. So the more you lose and the more mistakes you make through your losses, the more fucked you get, because to get back in regards to wins it's almost astronomical, which is when you get these issues of people averaging down, doubling up, and all this stuff. If your main mistakes are, for instance, instead of this being a +13, but instead it becomes a +3, or instead of this being a +5, it becomes a +4, or instead of this being a +4, it becomes a +2 or a +1, on average, due to the fact that the RR and the expected value is still positive, you're going to be fine because you're allowing yourself to take the losses as a good trader would. So if you learn anything from today, even as we're talking here, recognize that mistakes that you make around losses will cost you infinitely more than any mistakes you make around winning, right? So I made a mistake around winning right here, and I can get on here and talk about that because I don't care. I trade my own money. I trade independently. You know, what you think, what other people think does not bother me. It's not important to me. And I also don't care about like the whole little Instagram side of like, oh, look at that 30 RR. It's like, yeah, this trade could have easily been the 30 RR, and I still, based on my let me open this up, based on my management rules, would have actually still been holding this trade, because usually my management rules are to do with the 20 and 50 MA to keep my management very simple. However, I closed it because I was going to sleep, and I was like, there's no way it keeps going, because I even make mistakes, like I said, but it kept going. And that's just part of the game, right? And then it just made a beautiful move. So some people on my team were able to capitalize on this. I wasn't. That's fine, because again, my mistakes are never going to be costly in the realm that they're costly to others. Okay. So let's go back to EU here. I forgot exactly where we were because I just went off on a rant. But very simply, Oh yes, so we were talking about this reaccumulation model. And here, like I just said, we went through multiple redistribution models. Now, what's interesting about multiple redistribution models, and this is something taught in the mentorship, and I'm going to give you a little bit of a synopsis here, because again, I love getting on here and teaching you guys, but again, these videos end up being like fucking 34 minutes already. So when you undergo multiple redistribution models, what that's showing you is money is continuously coming into the long side and then being retaken. Money coming into the long side, retaken. Long side, retaken. But the second it begins to happen multiple times, and at the same time it's starting to hit a higher time from SSC, well, now every break up becomes a lot more potent, a lot more powerful, a lot more likely to have money flow into it to that direction, right? So this is how you start noticing that the process of going bullish actually requires a lot of time based on the time frames you're watching. So if we look at this long here, let's decide why it is at this point on this exact break here that I was assuming prices may actually start a bullish market. Now, I didn't know, right? Prices could have continued a bearish market, but why was it that I considered the fact that price was bullish? Remember, as I spoke about earlier, I didn't trade this market until it got basically to here again, right? Because at that point, I was very confident, based on my ability to view context, in the bullishness of this market. That's a very important thing to remember, because past that, anything could have happened and it wouldn't have affected me. Notice how being wrong does not affect me. And then go a little bit further and ask yourself, how does being wrong affect you? When your zone that you draw fails, or when your direction fails, are you getting emotionally hurt even though you did nothing wrong, even though you took no losses, right? Or are you taking unnecessary losses when there was nothing to take to start with? Those are two issues that you need to deal with yourself. But just remember, being wrong doesn't matter, right? Because remember, what are you? You're not the soldier looking for action. You don't care about it. Your zones are there. You know where money should come in, where it can come in, what it should be doing based on the models. Let's wait for that. If that doesn't happen, okay, that's no skin off my back. I'm gonna go chill with my family. I'm gonna go do some other shit. I'm gonna go run mentfunding. I'm gonna go run my other businesses and wait until the bias is met. It's nothing more to do, right? The money hasn't proven that it wants to get behind. There's nothing for me to do. There's no action for me to stalk and to get in, right? The zone's failing and me being wrong about the direction or the bias or the zones does not matter. And the reason I repeat this so many times is because I need a lot of you to realize that just because you have your zones drawn doesn't mean shit. It's fine. Let it fail, okay? So let's go into a little bit of the technicals today. So this break occurred right here. Why was I considering underlying was switching to bullish at that point? One, we've underwent multiple redistributions on the way down, which means multiple times money has come into the top side, and this time may be the time. We don't know, which is when I worked myself up to a beautiful, beautiful little 12-month chart. Now, again, if you join the private mentorship, you're going to see me pinpoint these zones before they ever were hit, okay? This is the exact zone I looked at, this last down move before the up move, simply on this breakup based on this SSC right here, SSC. Now, again, this move is likely not going to happen. I'm going to be dead by the time this fucking move completes. I mean, like, how long is this shit going to take? Like, this is a yearly chart. You know, this can easily take, okay, maybe not too long. Maybe 3 decades. 3 to 5 decades, maybe it can get up here. We'll see. We don't know yet. Nonetheless, that's the zone we had primed up. And as we went to the daily chart, right, that's where you had your break occur. And from there, you had multiple breaks continue to the top side. That's showing you that money's getting involved. And not only that, but it began to build what I call, and what I teach on this channel as 2.0s. The last unmitigated portions of the given leg were mitigated and continued moving, which means that underlying money is supporting the move up. So this area here also not only was a refinement of that 3-day, but also acted as a refinement of this 2.0. So, and now if I ask you a question, if you guys remember, what is it called when these protected lows shift upwards and then break down? That's what we called the reaccumulation model. So as they broke down here, every trader in their right mind wanted to go short, no matter what. Everyone. Doesn't matter from where. They wanted to go short here at these zones, after they took out these equal highs, at this imbalance, at this zone, at this zone, at this zone. Those are all the traders that lost infinite amount of money, and that's where we got our trending environment, our trending market. So that's a reaccumulation model occurring there. Fantastic. Right? And that was that 3-day SSC. Low to high, SSC, continuation. Just looking for that. So At that point, money had proven that it's behind this move. Money had come into the 12-month zone and started to put an accumulation model based on the fact that we've had multiple redistributions and now have broken long. That is an underlying accumulation model, as I teach in the mentorship. And if you do join up, it's in webinar 100 and onwards. So 100 onwards is all this stuff, and it's also going to be part of the remastered course, okay? So price comes in, begins to break up. Fantastic, all beautiful. Now again, right, we were following longs on this thing on the lower time frames all the way through. There's multiple entries here. I'm just going to show you a few of those entries. So what I've been teaching the team is what I call the ICI methodology. Very simply, it's an impulse, correction, impulse. And you look to enter on the breakout and the basically the expansion out of the impulse. It's as simple as that. It's a very simple strategy, and you can do it on any time frame, and it's very scalable, right? Even on the monthly, on the 6 month, whatever you want to do. So as price began to put this in, very simply, what you're looking for is a clear entry criteria like this. So notice how it's now shown the longs, and then it goes I, C, I. This is an impulse, correction, impulse. And very simply, as we look at this, you have to think about it as the candles are starting to. This candle right here, at the time of it being created with that wick, was an expansion candle. This is a phenomenal kind of trade. That trade would have been 1 to 2 before coming back to break even. So nothing to do there. Now the next time is I, C, I. Again, on this candle, that's a perfect kind of expansion. Now again, I can't get into it too much here because there's a lot of stuff behind this. But again, this is a phenomenal kind of entry. And in this case, you know, this one went to do insane things for you based on your management. That's a great ICI entry right there as well. Let's keep going. If we go a little bit further, this ICI is a little bit weird to see, but this one's perfection. On, again, this candle right here as it expanded is a beautiful, beautiful long that you would have entered. And again, a phenomenal trade right there. These are the exact entries I take across all time frames, and you can also make this work for yourself on a minute, 1 second, all you want, but the stop loss will become too small. Like on an hourly here, the stop is 20 pips. You can easily risk multiple hundreds of lots on this without experiencing too much slippage and get funded with mentfunding or any other fund with no issue. That's a really good thing. That's why you want to focus on scaling systems, right? Damn, I hope like people watching this aren't like, what the fuck is he saying? There's too much shit going on, because I just have so much things I want to talk about, but I don't know how to keep it all condensed in one video. Like, what is going on? This is another great ICI entry, ICI. This is phenomenal, like absolutely phenomenal. Similarly, this one right here, as it begins the expansion, again, we don't wait for candle closures. This is a phenomenal trade right here off the expansion. So you can see just even in the start, there's just infinite amounts of trades. Then again, you have the same thing happening, ICI. I believe we even traded this one with the team. I don't remember necessarily, but this one right here is phenomenal, right? Same thing. You can see the I, C, and then I, it expands out. It's a phenomenal trade. There's another one on this candle here. So we'll go quicker now. There's another one on this candle here. That one actually comes for an instant loss. There's another one right here on this candle. It'll take time for you to spot these. I'm going to be teaching these a lot in the mentorship, but these are all phenomenal entries. Another one on this candle here, phenomenal entry. This candle here is a phenomenal entry. This is a little bit slow. This looks like it's rollover, so that doesn't matter. This is all too slow. You'd wait for bigger moves to come in, bigger money comes in. On this candle, it's actually an okay trade. Would have been an instant loss. Keeps going. These are too small. I wouldn't even touch them. Price begins to break down. Yeah, and during this time, we didn't touch it, so we're going to talk about that in a second. And then again, as the bullishness brought back, beautiful trade here. I actually traded this one. Beautiful trade here. Beautiful trade here. I traded this one, and beautiful trade here, traded that one, and then a beautiful trade here, but that was during news, so I did not enter it, right? So just on the hourly alone, so many opportunities if you understand what you're looking for. This is just based on the ICI methodology. So hopefully you're seeing, because a lot of you have been asking me, hey, once I've discovered my understanding about where market's heading and what it's doing, how can I get involved without my zones? This is why you don't need zones. The zones are telling you the story. The zones are telling you how money's getting involved, what demand is being held, what demand is being absorbed, where the big money wants to head, if it's building up positions to make that big money move, whether it's through 2.0s, like I showed you on the 3-day and the daily recently. And once you have that established, you can look for continuation-based entries, because after all, hopefully, you're someone that's trying to build a trending-based system. So if you look for ICIs, right, continuation-based entries that aren't reliant on price making a big pullback to a 61.8, to a discount, to a zone below, to a support resistance, to a break and retest, if you're not focused on forcing the pullback and you understand the money is now heading upwards, then very simply all you have to do is get involved with the money as it plateaus beyond bases. That's really it, right? ICI, impulse, correction, impulse. Impulse, maybe a bigger correction, correction, impulse within it, and it takes off. Those are the setups that I teach my team now. Those are the setups that I'm personally using. Those are the setups I use with stocks, currencies, crypto. You can see some of the stuff I trade here. Stocks, currencies, metals, SPX, so some indices, crypto sometimes, but right now crypto doesn't have much of a good move. And I mean, it's just, it speaks for itself. It's absolutely beautiful what's occurring, right? So nonetheless, those were all phenomenal areas all the way up into the run on this high. And then beyond that, I wanted to continue following longs like I spoke about, right? So beyond this high, this is where I began to watch for more longs, but price began to get choppy. And then all of a sudden, like I just spoke about on the 4 hour, right? Yep, on the 4 hour, it began to break down. And again, after break one, notice how during this time, it didn't set up anything. It just came down into price and then broke down. And then this break number 2 right here. So again, this is, for those of you still watching, I think it's fine to mention it. This is what I call the double MB as well for my team. And this is a double MB that's occurring, that not occurring for a reason of reaccumulation. One, because we've already had multiple reaccumulations, and two, because we have a zone down here that we can take a step back. This is where context gets a little bit weird and we don't touch it. So this is where it's actually very important to understand that I'm not sitting there trading every single day on any given pair, right? Every day I have an option or a market to watch, right? Like I'm in Adobe right now, DOCN. Like every day, just on my normal scan, there's already 89 stocks here. I bet if I go through these, there's one that's setting up well, right? So if I just take a look at this, just very quickly for you guys, you know, I'll look for a clean setup in regards to what I look for. So none of these are actually clean. So I actually would not enter any of these. This one's, it's okay, right? And then I'd look at the volume on it sucks, but I look at the context of it, and the context of it is actually okay as well. So this might be a trade that I'd be open to potentially longing, right? So already I can identify trades through context that I could take any given day. But the question is it worthy of taking it? And in this case, I would not take it because of, you know, a few metrics here that I'm going to be teaching in mentorship, but that's not important, okay? Nonetheless, there's opportunities every single day across multiple pairs. So when I'm not trading EU for, how long was this? So from here till around here, for about a month, right? I'm trading things every single day. Other pairs, other metals, cryptos, stocks, or nothing at all. It depends, right? Sometimes there's nothing to trade at all. Maybe the context is not there. But nonetheless, it's important to realize just because price broke down, it did not make me bearish. Now, a lot of you might ask me, what would have made you bearish on this market? And from that lens, I'm going to say, that's what I teach in the mentorship every single week. And I talk about exactly what would make me bearish, right? Because there's an underlying model that needs to occur. Money needs to come in a certain way for it to show that the money has transferred into a more bearish model. At the moment, everything's moving bullish, and there's no reason for us to expect anything other than bullishness. So when this began to break down, there's a disconnect between the bullishness and the bearishness, right? There's a disconnect between the bullish underlying money. So I go, I'm stepping away. Other people are going to force things here. That's where people lose money. So I waited. And as price made its way back down into this daily final S&D 2.0, again, why is it a 2.0? Follow the last down move before the up move, down move before the up move. Keep following it, unmitigated, boom, you get to this wick. That's the last unmitigated wick. You can see it's supported by this imbalance right above it, or unmitigated price action, thereby making that the last 2.0. Now, do I care as price gets here whether it holds the zone or not? No. A lot of you do, and that's where your problem lies. This zone does not matter. The zone can fail like this, and it won't matter, right? I'll just stay away from the market, right? I've already been staying away from the market for about a month. If it fails it, I'll keep staying away from it. It's as simple as that. Just like UJ right now, where after my bullish bias has began to fail, I walk away from it. I do not care whether this zone here holds or not. What I care about is, if it holds, is it showing me the blueprint for how money gets behind the move so I can start following long? And the answer was yes. And the reason for that is because as price came in, it made the break up. That's an MB1, as I call it in the prime mentorship, or just break to the top side. Price mitigates those last points, makes the SSC, and begins a run on highs. That's now showing to you money getting behind the move, and that money wants to support this move up. And as a result, following longs makes the most sense. And then you ask yourself the question, where can we follow longs to? The next institutional structure high, as I call it in the mentorship, but just the next structural high off of this leg here to run this, and then hopefully, as I expected back here to happen, but it didn't, to now make the continuation run like so. That's exactly what's starting now. And that's exactly why we are firsthand seeing a lot of our members, one, just completely milking the XXX pairs, one, but two, getting funded. It's exactly what is demanded of a trader and demanded of you, okay? So we're making that run now, beautifully enough, right? But the reason we began to follow it is because it showed us the accumulation. The model was shown to us, and the model began its move. And again, as it began its move, we know we're already expecting reaccumulations. Look what happens. Protected lows increasing, they break down. What is that? Is that a bullish sign or a bearish sign? So a lot of you that aren't part of the mentorship are slowly starting to see that bearish breaks, in many cases, are signs of bullishness. And if you can confirm them, or if you can line them up with a zone, like a 2.0, because again, this is a zone that was mitigated prior and is now unmitigated. Prices traded into it despite being bearish. It made a bearish break, oh gosh. But despite making a bearish break, and money began to come in behind it, well, everything's showing bullishness now, right? The underlying is bullish. Price wants to reach for this high. You can see the highs I had drawn for my team in my most recent webinar. You know, we spoke about this thing just taking the fuck off. You know what, since you guys are here, right, at this point, it's fair game to share more of the private stuff with you guys. Because if you're still watching this, you are definitely someone that's actually trying to learn, which I really respect. So here's webinar 109, 2 hours, 30 minutes. Again, you can see the data was released 3 days ago, right, on a Sunday, before price ever delivered. You can see the trade that I was in and the expectancy and the areas I had drawn to keep seeing price go for. Let's go ahead and skip to Euro USD, you know, looking for that long. Let's go ahead and skip forward to where we spoke more about context. Yeah, so you can see we're just looking for longs to continue, right? Exact same markup you're seeing. See if we can see more on this. Oh, here we go, right? Like same markup here on the higher time frame. Hopefully we can find it here. Yep, same markup here on the higher time frame. The exact same thing I'm talking about. You can see the highs we have drawn in, looking for price to make a run on that and then continue significantly higher. I'm gonna mute myself here. Maybe I can play it a little bit faster. You can see what most people are doing. We have members send this stuff all the time just for fun, but don't know how it happens. Again, I don't use this to analyze, but most people are short on this thing somehow. We don't know why, but they can do whatever they got to do. We're continuing to follow the longs, nothing else to do. Gold, we're also looking to follow the longs. You can see we're looking to follow those longs on gold. No issue, super clear. And you all know what happened to gold this week. You know, it blew up to the top side. Euro USD, right, as it is right here. Talking about the specific entries, looking for the run on these highs and these highs here, right? Notice the 1.10956 right here. This line up here, 1.10956. Here's that 1.10956 right here, right? That's that exact run of that exact zone that I'm talking about with you guys today, right now, of that exact structure. You know, I mean, I don't need to prove myself to you, but I'm showing this because I want you to realize that this is not something that needs to be done in hindsight, nor is it learned in hindsight. This is something that you can actively learn, the tools you can learn to do, to follow, and then you can begin to actually follow them accordingly in any given week, right? So, yeah, Bitcoin as well, and you guys all know what happened to Bitcoin, Euro USD, looking for that high, you know, all the same thing. So I don't want to waste your time by going and finding the exact areas where I said this is going to go, this is going to go, this is going to go, but I did. You know, you can take my word for it here. You don't have to, but pay $100 because that's how much it is a month. Hopefully you'll stay on, but pay it. Cancel your sub. Go and watch my webinars, especially the most recent ones, webinar, you know, 100 and onwards, and see what I've been saying about this market. And then ask yourself if the value that is being taught there before it's ever happened in non-hindsight, if it's worth to follow along, right? And then become part of one of the best groups in the industry. So this is what we'd call a reaccumulation model. Prices began to accumulate. Again, notice how my zones inside of here are holding, failing, but it doesn't matter because they're showing me an underlying of what's occurring. Price absorbs the zone and takes off. And at that point, I began following the longs. And again, you know, we spoke about this a little bit. I make my own mistakes, but these are the kind of mistakes that you should be okay with making. Okay. So a few things to take out of this teaching today. Hopefully you took notes throughout it because there's a lot of things we covered. One is the understanding of context and models and how important they are to framing the underlying direction. Two is how being wrong is actually not important and how, you know, in most cases, it'll just mean that you can walk away. Three, how you need to stick to an understanding about if money's heading in a certain direction, wait for money to prove that direction to you. Don't sit there and because it's breaking down, go, oh my God, it's short. Talking a little bit about entries and great trend-based entries, so you understand how once you've established trend and once you're good at establishing that, how you can actually get positioned consistently in that given direction on anything, and a few other things, definitely. But I think I got across what I wanted to get across. I just wanted to get on here and talk to a few of you about that. So hopefully that did help. Yeah, take your trading to the next level, guys. I hope you enjoyed this. You know, I've been saying the same thing forever, and I'm going to continue saying the same thing for as long as I live, hopefully for the next 90 years. Yeah, maybe we'll come up with ways to keep ourselves alive for even longer. So maybe longer than that. But very simply, following nothing but the same rules over and over and over again, following the models at hand, getting involved through ICI or very simple breakout methods, and outperforming most people in the entire world, because somehow most people are forcing shorts on this. And I hope that if you were someone that's forcing shorts on a market like this, it opened your eyes. This video, along with my other public ones, as along with my private ones, which are hopefully you're going to be able to see because you join up, they'll open your eyes to, you know, what you've been missing. Because I have so many things I want to share, so many things I want to teach, but it's only, I only have so much time that I can get on here and just like teach the synopsis of these surface level in-depth ideas. You know, I have hundreds of hours that I can work with on my back end team though, and I think the remastered course is going to take a lot of people's trading to the next level. So to wrap this up, you know, thank you all for being here. This is what happens when you commit yourself to a process and you allow yourself to basically be taught and unlearn the bullshit that's out there. So congratulations, team, to all of you that are getting a little shout out here from the names, because you get to see yourself in this public video. But keep ascending, guys. Thank you so much for watching.